What does that wage growth story tell you about the potential for margins to contract and maybe markedly over the next couple of quarters?
Yeah, I think we've for sure reached the period of peak margins. We're seeing that across all of the earnings reports that happened in the last quarter or two. We know that that pressure is going to persist and continue. Some businesses are able to price against it, others aren't. But I think if you look broadly speaking, the wage growth that we're seeing is primarily happening, on the front line. And I think that that also has important implications for profitability for most of those businesses, which tend to be a little bit thinner margins. I think broadly, the Chair Powell is really in a position where he can't ignore that strong wage growth, and he has to take action against it. And so the idea that there's going to be a major pause or pivot, I think, is pretty unrealistic.
So, Julie, what do you think explains the rally we've seen of the mid-October low, and even the rally after payrolls on Friday, where we gapped lower and then only finished the day down by about 0.1%?
Yeah, I thought that was interesting to see the market's reaction on Friday, where we kind of started with the typical, good news is bad news. And I think we are recognizing that there are going to be fundamental pockets of opportunity. I think the rally is really about coming from a place of, are we going to have 75 basis point rate increases forever? It sort of felt like we were. And so even 50 is an improvement. What I think is really important to keep in mind is that, yes, we're at 4.5. That is not that markedly higher than a 2.5%, which I think is what we would think of as neutral. So I think, yes, we've raised rates really quickly, and that really has had an impact on valuations for tech companies, where businesses are more sensitive in terms of interest rates. But I think broadly speaking, we're in pretty good shape, and I think that's what investors are recognizing.